Welcome, Mr. Denome. Today we're looking at if the Donald Trump's economic policies are actually working or if they are backfiring like we have never seen anything like it before. And the perfect place to start this video is what happened just now, which is a 104% tariff against imports from China. Donald Trump just signed this executive order. Now, let's take a look at the reality. What are the actual goals of this economic policy that Donald Trump is issuing? Number one, he wants low inflation. Number two, he wants low interest rates. Number three, he wants a trade surplus because US government is running a trade deficit with other countries. Number four, he wants more US jobs. Number five, he wants higher salaries for US workers. And number six, he wants more United States manufacturing, and he wants other countries basically to buy US goods. And this is tied basically with the trade surplus idea. Now let's examine all of these goals that Donald Trump actually has. And by the way, tariffs are simply a tool to reach these goals. The tariffs themselves are not a goal. So let's take a look at the inflation and the interest rates question. Obviously, when we talk about inflation, when you place a 104% tariff against goods coming from China, that is directly translated into inflation. So the tariff policy is absolutely inflationary because when you import the final products from China, they are slapped with a 104% extra charge on top of the actual product when it's shipped to a port in United States. Now, a second way how this causes inflation is when a company in the United States manufactures anything and a component is coming from China. Those components are also charged with a 104% tariff. So the end product that is finally manufactured in USA will also have to go up in price. So this is absolutely inflationary. So to have low inflation, that is already taken out. So let's take it out. This is not working. Number two, low interest rates. Now let's take a look at what are the interest rates doing right now after the tariff policies have been implemented. And for that, the best way to look at it is the US government bond when we're looking at the 10-year treasury yield. Because low interest rates, the number one thing to look at is the government bond yield. And when we go and take a look at when the tariffs came into play, first the interest rates fell down to a number of 3.85%. And from there, basically this week, the government bond yield has absolutely spiked to 4.35%. And this is showing that the interest rates are not going down, they are actually going up as a result from this policy. Now, some people are saying that this is happening because China is selling the US government bonds. But the reality is that the conventional way how to combat inflation is to rise interest rates. So investors are looking at the inflationary tariff policies and they think that, okay, this means more inflation, which means higher interest rates. And that is the reality what is happening with the yields here. And Donald Trump is not happy about high interest rates. As you can see here, a post from April 7th from the official account of Donald Trump. He says that there is no inflation right now and it's time for the Federal Reserve to cut down the interest rates. But is the Federal Reserve actually in charge of interest rates? The answer to that question is no. The investors are in charge of the interest rates. So let me prove that point to you before we continue, because some of you have a misconception that the Federal Reserve is in charge of the interest rates. And for that, let's not take a look at the 10-year Treasury yield. We take a look at the 2-year Treasury yield. And let's go to the weekly view for this chart here. So this is the 2-year government bond Treasury yield. It's currently sitting at 3.7% interest rate. And let's put the federal funds rate, which is what the Federal Reserve has power over. And when we lay that on top of here and we go back from the percentage to the regular, now let me ask you the question, which moves first, the 2-year treasury yield or the federal funds rate? And the answer to that question is the 2-year treasury yield always moves first, and the Federal Reserve only follows what has happened. So, for example, here you can clearly see that the 2-year treasury yields already started to climb, and then the Federal Reserve started to actually take action and raise interest rates according to whatever is happening in the 2-year treasury. And then when the 2-year treasury yield started to fall, that's when the Federal Reserve actually started to cut rates as well. The same thing is happening here. You can see the 2-year treasury yield already started to climb to the upside, and then the Federal Reserve was halting and waiting before they started to raise interest rates, and then they started to really raise them until 2019, and then the 2-year treasury yield already started to fall down, and then the Federal Reserve simply copied what happened in the markets. The same exact thing that happened in 2022, and now you can see the Fed funds rate started to fall down as the 2-year Treasury yield already started to fall down. Now, if 2-year Treasury yield goes to the upside, then obviously the Federal Reserve cannot cut down interest rates. So they may be able to cut it temporarily, but if the markets think that there's more inflation coming, then obviously the 2-year treasury will go to the upside here, and then federal funds rate basically has to follow. So what I'm getting at is that we will not most likely see a low interest rates as long as there's an inflationary environment. So that we can take out. So 2 out of the 6 goals are now basically not working. Now, a trade surplus, that is a great question. What does the trade surplus actually cause? And for that, I actually made a separate video yesterday or on Monday, basically saying that Donald Trump is wrong and this is causing economic suicide. So in this video, I explained exactly why a trade surplus is absolutely catastrophic. And for that, let me just show you the response I had for Donald Trump. And this is the trade surplus and deficit as per GDP. And on the gray, you will see whenever there is a recession. And basically, whenever the US government is trying to get a trade surplus, a recession follows. Basically, every single time there is a spike, then it is followed up with a recession. So a trade surplus is deadly for United States. You want to have a trade deficit. And the reason is because it is the reserve currency of the planet. Now, I explained it in much more detail in this video here. So watch that one if you are unclear why a trade surplus is bad for United States. And there's one person in government who actually understands it, and that is Senator Rand Paul. He said a higher trade deficit means more prosperity. Lower trade deficit means less prosperity. And he is absolutely right. I'm happy that 1% in government actually understands it, but the bad side is that the rest are about to find out. And that means that we're headed for a deeper problems. So a trade surplus is basically impossible to have as long as the United States dollar is the reserve currency of the planet. So this is an unrealistic goal. This is absolute madness, and maybe they will be able to achieve it. But let me ask you the question, and let me actually show you what happens when uh, here. So Vietnam, they were hit with a 46% tariff. This is an example of why a trade surplus doesn't work. So Vietnam got hit by a 46% tariff, and as response, Vietnam said, okay, fine, let's reduce the tariffs to zero. So it's zero tariff for us and zero tariffs for you guys. And then this guy who is an advisor for Donald Trump, he says, no, we will not give zero tariffs because they want a trade surplus, they want a trade balance between Vietnam and USA. And that is an idiotic goal. And I made a joke about it, so I'm just gonna read it out for you guys, because this is once I explain this, then it's clear why it doesn't work. So Vietnam says, okay, fine, let's do zero tariffs. USA says, nah, you need to buy our stuff. Then Vietnam says, okay, fuck, whatever, let's buy something from you then. What do you have to offer? And then USA says, would you like bombs, tanks, or F-35 fighter jets? And Vietnam says, no, I don't want death. Do you have anything else to offer? So what is actually being produced in the United States that other countries want? So from China, can you name one US product that Chinese people actually want? I cannot really think of any that the Chinese people really need from United States. Obviously, they cannot buy missiles, they cannot buy fighter jets, they cannot buy tanks because they are considering USA as an adversary. But how can China ever meet a trade balance between United States? Because there's not really anything to buy from United States. That is my point, that a trade surplus is idiotic. It cannot happen unless they completely tank the imports coming into United States. That means basically economic suicide all around. So this goal here, it's impossible to achieve, and even if they do achieve it, that leads to into a recession. So it doesn't work. Now the question is, will this create more jobs? And for that, let's actually head over to what Mr. Beast is saying. And Mr. Beast, he's one of the most followed YouTubers on this platform. And he says, or he is creating, he is selling these chocolate bars. You've probably seen these, and these Lunchable snack boxes, uh, which are absolute garbage and complete overpriced grifting. But he says here that ironically, because of all the new tariffs, it is now way cheaper to make our chocolate bars and sell globally, that we sell globally, not in America, because other countries don't have a 20% tariff on our COGS. So he's saying that producing these chocolate bars is way cheaper now outside United States than it is to actually make it in United States, because when they import stuff from outside the United States into USA, they have to pay the tariff. Whereas if they have a sweatshop in, for example, Mexico, and they ship the chocolates uh, outside the United States, if they ship the chocolate bars from Mexico to other countries, they don't have a tariff, so they can actually sell it with a better price. So this is not creating new jobs into United States, and he is not the only person complaining about this. When we take a look at Reddit, here you have small business owners basically complaining that this is absolutely devastating for their business. So Chinese aluminum parts tariff 73%. So we have a small business and ordered $3,000 worth of aluminum parts from China. Parts entered USA. DHL requires $2,400 for import duty, or they will send the parts back to China. So this is causing more costs for the small business owners. Then, well, I didn't see this coming. Just got an email from one of our Chinese distributors saying that they will no longer distribute their products in the United States with the reason offered as effectively the United States has become too difficult of a market to continue selling to. And here you have one business owner saying 54% tariff on bamboo clothing, bamboo stuff that he has been selling. He just hit 10,000 orders last week, and he says, I'm devastated that all my hard work is going to be pulled out of from underneath my feet, and he is likely to have to close business because he is selling bamboo stuff, and there's not a lot of countries that he can buy bamboo from. Obviously, you cannot make it in the United States. Then somebody is asking when to raise prices due to tariffs. And he says he's looking at other sellers and he needs to raise prices eventually or he has to close shop. So will this create more jobs in United States? It does not look like it. It's just creating more costs for United States. And if everything that you bring into United States is basically tariffed, that means that creating stuff and exporting it out of USA is also suddenly more expensive. So this is not creating those new jobs that Donald Trump wants. Yes, there are some pledges for investments for some kind of manufacturing. So yes, there's some new jobs that are created in the United States, but overall there's also a lot of devastation going on. Now, will there be higher salaries for US workers? Actually, the answer to this question is most likely yes, because as inflation grows and as Donald Trump is wanting to have a trade surplus, that means that money, US dollars that were previously outside the United States, if he actually is able to achieve a trade surplus, that means that the dollars outside the United States start flowing into United States. And as the dollars flow into United States, the dollars have to go somewhere. And obviously that creates inflation, and that usually means higher salaries. But as your salaries go higher, you are able to buy less stuff with your money. So yes, there will be higher salaries, but the purchasing power will go down. So yes, this is actually true. Higher salaries will happen. And more US manufacturing, like we already, I showcased you, this is not going to happen because suddenly it's more expensive to produce anything in the United States with components that come from outside the United States. So overall, is the economic policy working? The answer is an astounding no. This is a horrible idea, and this is actually also bad for the rest of the world, not only United States. So it's basically a lose-lose situation, and there's no winners here. Is there one more thing that I want to? Actually, there's a couple of points that I want to talk about. The first point is when we take a look at retail investors, they are actually now buying the dip in the United States stock market. And usually retail investors are absolutely wrong. So if retail investors are now buying the dip and the big investors are selling, that usually means that we are headed even lower. Even though the money is flowing back into United States, if manufacturing becomes more expensive, then the companies are not making as much profit, obviously, and that means that the stocks are not as valuable as they maybe should be. So this is cutting into the profit making of the companies in United States. So stock markets might actually have another hit coming, and the retail investors are being dumped on, and the false promises of Donald Trump, that's gonna bite in the ass of investors, which is gonna be very ugly. Then one final point that I have for this video is thank you, Mr. President. Coming soon, the first $1 trillion Department of Defense budget. So Pete Hegseth, who is the I think he's the Secretary of Defense of the Donald Trump administration. He is now confirming here that the military budget for United States is growing to $1 trillion, which is the opposite of what they actually promised before. They said that they were gonna cut down the waste, abuse, and fraud in the United States government. But what has happened is the Doge has been able to cut down $140 billion in the government budget. And now Donald Trump is saying that he wants to increase the Department of Defense budget by $150 billion. So it's basically zero for zero or one to one. So whatever they cut, they now put into military. So now the question is, where does this actually lead to? It leads to a worse worse outcome where everybody is basically just putting money into military. We are seeing European Union spend money into military. The United States is spending money into military. So the adversaries of the United States are also spending money into military. So this president of peace is the complete opposite of prosperity and peace. He is going for war, and that's basically what we are headed for: chaos and war. I don't know how to put it in any more lightly than this. I hope he actually turns around. He fires all of his staff, who is now basically causing bankruptcies in United States. But this is basically what's going on. Inflation first, and then a wave of bankruptcies across the planet. So that's the world we are currently living in. Now, if you want to trade these markets, you know that I'm sponsored by Femex. If you want to short the markets, you can do it here. If you want to short crypto, if you want to buy uh, Bitcoin, if you want to buy even a gold derivative, that is possible on femex.com. So you can use my affiliate code to get extra discounts. You're eligible for $4,800 for welcome rewards. There's constant competitions here, and the fees are extremely low, only 0.01% when you trade with derivatives. But keep in mind, as we see a wave of bankruptcies, unless the government changes their policy, then keep in mind that you probably want to have your assets outside the banking system, outside other people's balance sheets. So, a good idea to also, despite trading these markets, is to have your assets in a self custody. So, uh, having them in a soft wallet or a hardware wallet also makes sense. I do have some links in the description for those as well. But trading these markets is obviously a good idea as well, as long as you know what to do. That's it for this video. I hope you liked it, and I will see you on the next one. Thank you, and bye bye.